Okay, today we're doing a deep dive into Nasmed Ozil Salik Hazmetlera Askew. You probably know them as the Etchipol Health Group.
That's right. We're looking at their 9-month 2025 financial and activity reports.
And our mission here is pretty clear. Cut through the noise and pull out what you, the individual investor, really need to know. Because honestly, these reports send some mixed signals.
They really do. Agipol, for context, is a big player down in Izmir, Turkey. They've got 3 main hospitals, about 325 beds total.
Quite sizable then.
Yeah, and around 900 staff. The report says an average of 786 personnel over the 9 months, including 85 doctors. They're strong regionally, but also making a big push for health tourism. Global reach is the goal.
Got it. And the structure, that's often key for investors.
Definitely. The Nasir family holds a large chunk, nearly 80% of the 500 million TL share capital. Just over 20% is what's floating on Borsa Istanbul.
So, mostly family-controlled.
Yeah.
And board
6 members, 4 from the Nasir family, plus 2 independent directors, Mustafa Sardar and Mehdi Karkisu. They pulled in just over 33 million lira in total compensation for the board and senior management in these 9 months.
Okay. And one point from the outline, any women noted in that management structure?
The report doesn't list any female members on the board or in the listed senior management. That's something we'll maybe touch on later.
Right. Now, before we jump into the financials, and you mentioned mixed signals, there's a big warning label we need to attach first, isn't there?
Absolutely crucial. It's about accounting standards. The 2024 figures we're comparing against, they use TMS 29 inflation accounting, basically adjusting for inflation to show real values.
Okay.
But the 2025 figures, they weren't fully adjusted for inflation under the current tax law interpretation. So you're looking at 2024 real numbers versus 2025 mostly nominal numbers.
So apples and enthalong, very different oranges. What does that mean practically when we look at performance?
It means the comparisons look distorted. A small nominal increase might actually be a real decrease, and a big nominal loss might hide underlying strength, or vice versa. You have to be really careful reading the headline figures.
Got it. So keep that distortion filter firmly in place. Let's look at sales then. Net sales, up just 1.22% nominally. Seems tiny.
It does. 961.7 million TL versus 950.1 million TL last year. Domestic sales were up a little more, about 2.2%.
But the international side, health tourism, that was their big focus.
Exactly, and this is the surprise. International sales decreased nearly 24%, went from 43.1 million down to 32.8 million TL.
Wow. Especially after getting that Turquality Marca status in June, you'd expect the opposite.
You would. Management puts it down to global volatility, rising costs. They see the international marketing as a long-term play, an investment that hasn't fully paid off yet, maybe.
Okay, that makes some sense. Now, profitability. This is where that accounting issue likely really bites, right? EBITDA.
Yeah, FFOC, or EBITDA, took a big hit nominally, down 34.55% to 196.5 million TL. The margin fell hard, too, from 31.6% to 20.4%.
And the bottom line, a net loss.
A reported net loss of 10.1 million TL for the period. That's a huge swing from a 58.1 million TL profit in 9M 2024.
Okay. Alarm bells might be ringing for some listeners, but you're saying this is mostly that accounting distortion.
Primarily, yes. It's technical noise. We need to look deeper at the core operations. And here's the interesting flip. Operating profit Isas Fayet Kari.
Right. What does that show?
It went from a small profit of 11.8 million TL in the inflation-adjusted 2024 figures to a profit of 36.1 million TL in these 9M 2025 figures.
So despite the headline loss, the actual day-to-day business managing costs and running the hospitals seems to have improved significantly in real terms.
Exactly. That suggests better underlying operational control and efficiency, even with external pressures. That's the signal through the noise.
Okay, that's a critical distinction. What about the balance sheet, debt levels?
Total assets dipped slightly, but the debt situation looks manageable. Total debt to equity is actually down a bit, from 21.7% to 20.9%. Pretty low.
That's reassuring. But cash flow. Operating cash flow dropped sharply.
It did, down to 15.3 million TL from 94.1 million TL. Right. But look where the cash went. Investment activities. There was a 78.5 million TL outflow for capital expenditure.
So they're spending money on what?
Modernization, upgrades. They completed the Agipol hospital renovation back in April 2025, and they're investing in new technology. This is spending for future growth.
Right. Building capacity and improving facilities. That ties into their strategy.
Precisely. Management's outlook reflects this. They acknowledge the pressures, but believe these investments, fully utilized alongside things like the true quality status and digital improvements, set them up for, quote, strong, sustainable growth trend in 2026.
So the strategy is invest now through the volatility, leverage the upgraded facilities and international certification, focus on efficiency, and target strong growth next year.
That's the plan. Maximize capacity, grow internationally, enhance digital systems, and also, interestingly, they mention expanding their ESG, environmental, social governance reporting.
Okay, let's synthesize this. We have a company navigating tricky accounting changes that create scary headline numbers, like that net loss.
But underneath, the operational engine, the actual running of the hospitals, seems to be improving.
And they're investing heavily in modernization and international reach, betting on future growth while keeping debt low.
It's a story of investment and operational focus masked by technical accounting effects.
So here's that final thought for you, the listener, to consider. We heard management mention ESG commitment. We also noted 0 women currently listed on the board or senior management team in the report.
Right.
How might or perhaps how must Nasmed's governance structure evolve to genuinely align with international ESG best practices, especially that S&G for social and governance, if they want that sustainable international reputation they're aiming for?
That's a very relevant question for any company talking ESG and long-term strategy today. Something to watch.
Definitely something to think about. If you found these insights helpful, please do like and share this deep dive. And of course, subscribe for more knowledge shortcuts.